here we are again. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers, and I am the very tired, scruffy trader. It's currently 7 o'clock in the morning. I'm about to go into market shortly on Morningstar. I'm just waiting for this to come down somewhat, and then I'm going to be looking to the long side. And if you haven't seen Morningstar before, what it is this. We're currently at 91p a position because I'm compounding as we go, using this compounding plan, and eventually it'll become this wage maker plan. But in the meantime, I'm just kind of building it up and journaling on a spreadsheet. Now it's done quite well. We're at 234 from a 500 balance, 13 trades opened at 100% strike rate. So I'm quite pleased with this system. And the system is forward testing. Now, for all this is showing heavy signs to the downside, I will be going long this morning. Now, for me, value is down this area. So we've got a bunch here, but possibly down here. Key part of it is to wait. So I need to wait to see if this shows its hand. Now, as we can see, it bunched here, so put a mark in. If it breaks, then it'll be from there up to there. But at the moment, it looks like it's coming down somewhat. So I'm just going to kind of let it see what's going on. And then I'll make a decision fully to go into market. But at the moment, check the other side. The other side says go long. I now just need to wait for the next signal to tell me to get in. And that's one of the things I've been working on from the last few days. Okay, so let me play the trade and I'll come back to you when it's finished, and I'll leave it as a single camera shot. Okay guys, just dropped a clanger. One of the things about being tired, I guess. I went to move the stop and I've closed the trade, which is a bit of a bugger. Why was I moving the stop in the first place? Well, I was moving it because it was coming into this point I'd marked and I could see the stall. So I thought what I'd do is I'll just move the stop into risk free in case it came back, and then just see if it would push up. And I forgot to switch one click off, and when I pressed it, it killed it. Bugger. Dear me. Never mind. Right, that's the troubles of late nights. But we still got 1156, which is our more than our 10 pips. But it could have been a lot better. So note to self, slap yourself silly. Don't tell Winky, because then she'll not kick off. Oh, dear me. These early mornings are killing me, boys and girls. They really are. Anyway, let's have a look, see what we've done. God almighty. Quite annoyed at that, actually. Right. 734.15. I'm not really going to touch on risk today. What I'll say is look at the other videos around risk, because I'm getting pulled on it every day, and quite frankly they're not listening to what I'm saying. Well, they don't listen to what I say anyway, but the point with risk is, and I bring it up on a lot of videos, I genuinely believe risk is probably the major factor that you lose. And it's quite a controversial subject because the industry teaches all of this risk reward all the time. And I'm not saying there shouldn't be risk reward. I think it should be rephrased as common sense. Because if you think about it and you go for 1 for 3 all the time, one, it forces you to put the trade in front of, well, in front of it going wrong, you know, in front of the freight train, because you're obsessed with tight stops. The market spikes all the time, and that spike will just take you out, and then it'll just carry on going in its direction anyway. Now, if you think about it logically and you are doing risk reward, it should be 1-to-1. It should have as much chance to lose as it has to win. Whereas when you go 1 for 3, you are 3 times more likely to be wrong than you are to be right. And that plays havoc with your mindset. So what the sensible thing to do is read the chart and be sure of your trade before you go into it. Because what you're trying to do is pick tops and bottoms. And there's a well-known phrase within the industry, and it's try to pick bottoms and you get smelly fingers. And there's a good reason for that. It is dangerous, you know. I never tried to pick the top of a market or the bottom of the market. And you hear me say it all the time. I'm not looking for the top, I'm not looking for the bottom, I'm looking for the bit in the middle. So that means by nature I have to let the trade breathe. But it's also a good thing because it means you can manage your trade into better positions. It's just about planning, guys, and stick to some plans and you'll be fine, you know. So there we go, bit of an odd one this morning. You can't, I was going to say you can't win them all. I did win, but in my mind it's going to be a loss because I made a mistake. And sometimes mistakes in trading can be costly, and trust me, I know that. I have lost a fortune through the years by making stupid mistakes, but I learned from each one of them, and that's the other thing, you know. Don't be afraid to get it wrong, guys, but if you do get it wrong, just think of it as a paid lesson in not what to do. Okay, so as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.